As a trader who's been successful for many years, this is exactly what I would do if I was to start from scratch. In this video, I'm going to walk you through from start to finish. If you're a trader who's just starting out or you've been trading for a while, these are the key crucial points that you must be doing if you want to make this a successful long-term trading career. So first and foremost, you actually have to decide to want to get into trading. If I was to start off again, I would jump on YouTube and I would be looking for a week or 2 weeks to be able to make a decision that I want to do it. If you've just started out learning to trade, you have to firstly do your research, and very quickly you should know that this is what you want to get into, no longer than 2 weeks. And before we get further into this episode, if you're someone who wants to make sure that you're up to date with the financial markets, make sure you're subscribed to our free weekly newsletter, The Market Brief. You're going to have access to it every single Monday. It takes a few minutes to read, and you're always going to be ahead of the curve. Now you've made a decision to start learning how to trade, you need to create a game plan. So what game plan you need to create is how much money are you looking to allocate into building this. See it as a business. Let's say you're someone who has a job, you're earning £2,000 a month, you should be allocating at least 10 to 20% of your income on investing into yourself. Anyone that is starting a business would be allocating a lot more. 10 to 20% is a very small amount. So let's say £2,000 that you're making per month. You're allocating anywhere between £200 to £400 a month investing into yourself, which is more than easy for you to get access to any education that you need, any softwares that you need. That should be your initial setup costs. I put my money where my mouth is. When I started learning how to trade, I invested pretty much £5,000, which was the majority of my savings. I wouldn't recommend that extreme, but as a bare minimum, if you're really serious, you need to be allocating at least 10%. So now you have your education and you've started off, you're going to begin with a demo account. This is something that you shouldn't be wasting a long period of time in. Now, I'm assuming you're someone who's literally just started learning how to trade. This software is just for you to understand how to execute on your positions, use TradingView a little bit and all the softwares that come into it. But apart from that, you should just be focusing on that for a very short period of time. What a lot of traders get wrong is they treat it almost like a university degree. They spend a year on it and then that doesn't give you the opportunity to get real emotions involved. So stay off of demo, only use it for a short period of time, then move on to a live account, even if it's just a very small amount. What I would do is I would create a plan that within a 3-month period, you're going to save X amount of money, and then you're going to start off with your first live account, even if it's very small. So the next stage is going to be more about your intention than anything else. What I would be doing is that I would be spending every single quarter a certain amount of money in investing into a coaching call. The reason being, 3 months is enough data to see, are you on the right track? So as a bare minimum, I'd be allocating those funds to make sure, even if I have a professional looking over my shoulder, to be able to see the last 90 days of my positions, am I on the right track? Is there anything detrimental that I need to fix? Otherwise, how do you know or not if you have bad form? Now, what you've got to look at is this. It might not be an issue in the early stages, just the same way that if you was going to jump on some squats and you had light weight, your bad form could go unpunished. As soon as you stack some weight on there, you're going to get injured. It's almost the same thing when you're learning to trade. You want to build the solid habits right at the beginning. But if you've got the funds to allocate and you can see this as a long-term career, there should be no reason whatsoever that you're not allocating a certain amount of funds to have someone just look over your shoulder to make sure you're going in the right direction. Your first year of trading. This is where all traders go wrong because they do not realize that your first year is nothing to do with making money. The more you chase it, the further away it will go. Why? It's because you will attract bad behavior and bad habits. Your focus should be on what habits and processes within my routines do I need to have in place that will just produce the outcome as the side effect, not about how much money can I make, because you will take shortcuts and it's the reason why the statistics are the way that they are. So in the first year, you shouldn't be looking at what your return should be. It's not even important. Tracking your performance, you can use your monthly as a check-in. Now that's just a healthy metric to look at, right? Where did I finish up for the month? But it's not detrimental to your returns because you should be measuring yourself on a quarterly basis minimum. You can have an average month, but you can have a great quarter. You have to be thinking more longer term. But the first year, if you're down minus 40%, minus 30%, listen, you might be trading on $1,000. It's not important. The habits are far more important than the percentages that you're currently making or not making right now. If you're someone who is just starting off, there's a high chance that you may not have a whole bunch of funds to be able to trade with. The good thing is, it's new times. You're able to access capital through prop firms, etc. What we have in Falcon, we have our own in-house fund, but I'll talk about that at another time. You've probably seen videos on that before. However, what I would be doing is that I would be allocating a small percentage into building up my personal capital. You don't just want to rely on these external funds. Even if it's slower, you do want to be working towards building up some nice, solid personal capital. Once you've got that, you can utilize certain amounts of money to be able to invest into these challenges for you to be able to get withdrawals, and of course as a great stepping stone to be able to scale up. But once you've got some profitability and you've got some experience, yes, you can go for a challenge, you can go for funding, but you need to have a plan for that. Most traders, what they'll do, if they do get a withdrawal and then manage to get a payout, let's say they make £8,000, they'll just blow that, or they'll upgrade their lifestyle, or they think they have to get ahead as quick as possible by getting another funded account and another funded account without addressing other issues that are probably more important, which leads me on to the next part. The skill itself of trading is not that difficult. Once you know what you're doing, the skill of clicking the mouse or filling out the deal ticket, that is pretty straightforward. When you look back in hindsight, you know what you've done wrong. So why didn't you perform? It's because under pressure, all of the emotions are involved. Take a look at football, for example. The act of taking a penalty kick is not difficult. The concept in training under no pressure is very, very easy. They can do it with their weaker foot. However, Champions League final, 1-1, 90th minute, and then you're taking a penalty kick, 80,000 fans whistling, that's a completely different ballgame. So the skill itself has got nothing to do with it. The skill is easy. It's more so your composure under pressure. Do you think that's anything different when you're trading large sums of money? It's the reason why in small capital you can perform, can't you? However, as soon as you have your funded account, all of the emotions creep in. So if you don't learn how to calm yourself down, think calmly under pressure, you'll make poor trading decisions, which is why you're probably still losing your funded account. So what I would say is this: if you can learn simultaneously and go through a program like Rewired, there's a reason why we intentionally designed this program, and we've been able to help traders scale up on their funded, keep their funded accounts. Over 90% of our traders on our in-house fund have gone through the Rewired program and sustained their capital. Why? Because the program teaches you how to do that. The beliefs that you have right now probably don't serve you, which is why you're in the position that you're in. So in order to get to the next stage, you have to think differently. You have to become a different type of person in order to be able to trade sustainably longer term, especially when you've got more money on the table. And if you're someone who is interested in learning how to develop the right mindset for trading, the link is in the description for the Rewired program, where you can join hundreds of traders that are trading all different types of strategies and are using these tools, techniques, and resources to get to the next level in their trading. The one voice. Who are you listening to? Audit the source of information. Where people go wrong, they're listening to 10 different voices, 10 different mentors. If you're not learning from someone who has at least 5 years experience in the market, they're just a baby. 2 years is not enough. You don't have enough experience that you've gone through to be able to help someone. In the earlier stages, I remember helping some people that were doing very, very well in 2014, doing very well in 2015, and as soon as 2016 came around, their results went from 80 to 90% per year, like very, very well, to almost minus. How? So imagine that trader. They could have scaled up on funded accounts. Of course, it wasn't as popular back then, but they could have scaled up on lots of funded accounts, built up some capital, traded well for 2 years when the market was trending. It was incredible. I remember at one point, euro dollar was absolutely phenomenal for about 9 months straight. Even if you didn't know what you was doing and you just carried on selling it, you would have been making so much profit. And I remember those periods. But those same traders, when they stepped into 2016, you'd think they just lost all of their skill. They didn't know how to trade because they didn't know how to deal with the environment. So you imagine that person now trying to guide someone in 2016 and going, right, this is how you do it. It's like, well, how are you doing? Well, I'm in the minus. Well, why are you in the minus? You was doing well for 2 years. Yeah, but I don't know how to deal with this environment. Of course you don't, because you're too early on. Premature mentorship. People are trying to help people too early on. The funny thing is, you end up stunting your own growth anyway. So before you're so quick to want to guide others, make sure you're competent, you know your shit, and that you've got everything on lock and you've scaled up for yourself. At a later stage, if that's your passion and you want to help people, all the power to you. But don't do it too early. We see that a lot, not just in trading, but in all types of industries. You have to start changing your perspective on the position that you're in. So for example, some people say to me, Mark, I'm not happy with my job. I don't really like what I'm doing. I really want to escape the 9 to 5. I say, right, all the power to you. Let's flip that. At the moment, you're getting paid to learn how to trade. How about if you saw it that way? So see it as the income that you're getting, like the example that I used at 2000, that's giving you the ability to invest into this skill set. So before you complain and think, I don't like my position, see it as do your job well. How you do one thing is how you do everything. Still do everything really, really well and develop that type of character, but also know that that is giving you the income to be able to invest into yourself. When people flip that switch, you'll usually see a big change in their results. Remember, you're getting paid to learn how to trade. People often ask me to say, Mark, if I come with you, how much money can I make? Forget about how much money I'm going to make you, right? That will happen as a side effect of you learning all of the things. I can't control what trades you're going to take. Once you know the techniques, even our advanced techniques, you will naturally, over time and experience, get involved in these positions. If you're in with a 10 pip stop on a trade and you happen to have 400K in funding and you bank 10%, well then you make your money, right? I can't control all of those parts. But what I can do is put things in place that helps you not to lose money. So don't think about how much money I can make you. Think about how much money am I going to stop you losing? How much time am I going to save you? How much money would you have just lost and blown if you didn't have the things that I put in place to help you do that? For example, Rewired. I would argue so many stories of people that usually would have lost funding have used the techniques to keep their capital and not lose their funded account, then made a withdrawal for 10K. They've made a very small investment, a drop in the ocean that is now giving them the right framework to succeed. How valuable is that to you then? See, you don't appreciate these things only when you're in a situation where you have to be composed. So again, all of the things I've mentioned in this video, that I put my money where my mouth is. At 18-year-old, I invested all my savings, I went all in. You got to ask yourself, are you just being a dabbler and then you're scared to invest £200-300 a month into something that's going to provide you a skill to never work for anyone ever again? And you're questioning that. However, I bet you if you look through your bank statements, you've got really poor habits, you're really wasteful with your capital, and on one hand you say you're really serious about it. So it's really important that you don't fall into that trap. Don't compare yourself to anybody else. I hope you took a lot of value away from this episode. I've thoroughly enjoyed filming it. Bearing in mind it was over 15 years ago when I very first started, but there's some key things in here. If you really take it serious, you can get ahead faster and more efficiently. You left to your own devices, I mean, the stats show that it's not going to be looking good for you. So insert clip here of it's not looking good, brev.
It's not looking good, brev.
I basically said it and I nearly made myself laugh, so I'm glad that I didn't. Like that. I can't see it that way.
Yeah.
And last but not least is your psychology. What was I going to say about that? And the final part here is that can I go small investment or is it too harsh of a cut?
Too harsh.
Ah,